Hi, I'm Dan Hanford, founder of the Multifamily Investor Nation and managing partner with PassiveInvesting.com. I want to thank you for taking the time to watch this session, which was originally recorded from the Multifamily Investor Nation Summit from January 2020. We had over 1,000 attendees and over 40 speakers, and I know you're going to enjoy this session. I want you to also take a moment to go check out the next summit that's coming up. We do them twice a year, once in January and once in June. You can go to MFINSummit.com to find out more information about the next summit that's coming up. I also want to encourage you to check out our premium edition of our Multifamily Investor Nation group. You can go to MFINPremium.com and start your free trial today. I also want to encourage you to go to multifamilyinvestornation.com and find out other ways that you can follow us and learn more about investing in multifamily real estate across the United States. Thank you again for watching, and now you can sit back and enjoy this session.
But I did realize after a time that it was going to take too many houses and take too long to kind of get me towards the financial freedom that I was looking for. So at that time, I looked into starting to, I was getting around people who actually were also building syndication businesses, and I decided I wanted to do that myself. So kind of went through an education process to invest in other syndications to see how they were run, did some construction lending, actually bought a coffee farm in Panama and a cacao farm in Belize with my solo 401k. So I was doing a lot of research on different asset types and different markets to kind of figure out where I wanted to go with the business. And through that process, I decided to focus on the mobile home park space. And that's, really, it's got a couple of great things I like about it. One, it's going to really be able to help out with the need for affordable housing in the US. And there's thousands of lots across the country that are vacant that could be used to house people that are looking for affordable housing. And I knew that it would be a good tool for me to be able to bring to my investors to give them good returns and allow them to invest outside of the traditional Wall Street assets. So let's go ahead and dive in. So I just wanted to give a little bit of background about some information about mobile home parks. A little under 6% of Americans live in manufactured homes or mobile homes. Those terms are kind of used interchangeably, and there's a concentration in the Southeast. So you can kind of see on the map there where their mobile home, kind of about where the highest percentage of mobile homes exist, with South Carolina, North Carolina, and then New Mexico in the Southwest that have the highest concentration of mobile homes. And this is a combination of the people who live in mobile home parks, as well as people who have mobile homes that are sitting on their property. And depending on where you live across the country, you may or may not see homes sitting outside of mobile home parks. In Northern California here, there's quite a few mobile home parks, but it's not that common to see mobile homes on kind of people's individual property. But in a lot of other parts of the US and places that I travel as I'm doing research and due diligence on parks, you can often drive through neighborhoods of single family homes. And then in between those, somebody has a manufactured home sitting on their property where they've decided, instead of having a stick-built home built on their land, they've decided to go the manufactured home route. So this is a combination of those two. One of the misnomers about mobile homes is they're not really mobile. I mean, they're mobile to begin with. They're built in a factory and they're on a chassis and they're moved into place. But what happens is more often than not, the mobile home stays where it was put in the first place. So the cost of moving a home to a new local site, maybe just 5 or 10 miles from where it might be existing, might cost between $4,000 and $8,000 to do that, to unhook the home, find a mobile home park mover to move it, and then the cost of the setup at the new location. So they're not really actually very mobile. And as I was saying, most of the time, once they're in their place, they really do sit there forever. To give you some sense of kind of what the cost of to rent one of these units or to rent the space is, the average lot rent, and we'll go over in another slide about the difference between lot rent and renting the home, but the average lot rent, if you own your own mobile home, is about $300 a month. And the average cost of a mobile home to rent, if you were just renting it as a tenant, would be about $650. And that's less than the average of about $1,200 that it costs to rent a 2 or maybe 3 bedroom apartment. So for many people, It's a way that it's definitely more affordable, and also some people choose it just from a desirability and lifestyle standpoint, where it could be a family that wants to have their own place where they can drive right up to their house. They've got a little yard, it's single story, nobody above and below them or on either side of them. So from if somebody's looking at living in an apartment, mobile home parks can be more desirable from that standpoint, and also it's typically less expensive. Okay, one of the amazing things about mobile home parks that makes it so different than any other multifamily asset class is it's the only type of U.S. housing that there's actually a decreasing supply. And that's caused by a couple things. First of all, there's hardly any, it's very rare that there's a new mobile home park that gets built. And it's really because the cities and counties, municipalities don't allow the zoning to allow it to happen. And there's a few reasons for that. Also, it does happen in some of the pricier markets, especially you find that here in the Bay Area where I live, is that the land is being sold and being redeveloped into office complexes or condominiums or larger apartment complexes, just because the value of the land, the use of the land is better than being used for a mobile home park. So sometimes they get rezoned and reused for something else. Other times they'll just fall into disrepair and naturally kind of fade away. And there's no new ones being built. So there's anyway, so it's unusual that it's one asset class that's decreasing in supply every year. Nobody knows exactly how many mobile home parks there are, because a lot of them, as you drive across the country, aren't really named. Some of them do have a sign out front. You drive inside, that park has a name, just like an apartment complex might. But many of them are just plots of land that have mobile homes on them, and they don't have a name. You can't look them up on Yelp or find them anywhere listed on the internet. They've just been existing for a long time, unnamed. But there's estimates between, say, 40 and 45,000 parks, and the largest owners of the parks, which includes about 3 public companies and some other pretty large operators, still account for less than 10% of the ownership. So the rest of it is owned by a lot of mom and pops that might be their only park there, or they might own 1 or 2 parks, and smaller operators like myself. So there's a lot of opportunity out there to still acquire parks. There's thousands of them available for sale that you can get at a great price. Again, I'll kind of go into that a little bit later about some of the things that drive that you can go in and quickly stabilize and bring up into the 12 to 14 cap range. And that's really, usually a combination of market rents that are historically below market and some operational inefficiencies that you often find in older operations that are run by mom and pops. I talked a little bit earlier about the high barrier to entry. Again, cities and counties typically don't want to approve mobile home parks. It's kind of they kind of talk out of both sides of their mouth often. That cities will often talk about the need for affordable housing, and mobile home parks could really solve a lot of that problem. But one of the issues is, because mobile homes are considered personal property versus a real property like a home, the property taxes that are generated by a home in a park are much less than an apartment, much less than an apartment or a single family home would generate. So particularly as it relates to schools and education, if you have a 100-space park that might have 200 or 300 people living in it, maybe there's 40 or 50 kids that are going to public schools, the cost to educate those kids is not even close. The cost far exceeds the property tax revenue that's generated for those. So just from an economic standpoint, municipalities know that if they allow zoning for mobile homes, it's going to be a losing proposition for them financially. And there's also the continuing stigma around, kind of quote, trailer parks. That's from TV shows and movies and, stories that come out in the news. So there's this stigma around them that they're not desirable. And sometimes if there are developers who would like to build a new one or expand one, the neighbors just have a kind of not in my backyard attitude about having a park close to them. And then lastly, just the density is low compared to multifamily. In markets where land is quite valuable, it's more cost effective to be able to build a multi-story structure on a piece of property rather than to have mobile homes spread out among a larger parcel. They are more dense than a single family home would be in a neighborhood, but still not as efficient from a land use standpoint as a multifamily building would be. Okay, so one of the questions I think people often ask me is they're like, okay, park owned versus tenant owned homes, like how does that whole thing work? If you see a mobile home park, like what does that look like? What does it mean? Like how do the people live there, and how do people make money running those businesses? So there's kind of two things that are going on in a park, and some parks are a mix of these two, and some are 100% one way and 100% the other way. If it's a park owned home model, and that's the way most of the parks that actually all the parks that I own are structured, where most of them are park owned. The park owns the land and the homes and rents them to a tenant, similar to the way they would a single family home or an apartment. And in that situation, the park's responsible for all the maintenance, repair, tenant turnover costs, because they own those homes, again, similar to as you would an apartment or a single family home. With that, even with the higher maintenance costs, the NOI, net operating income, is typically higher than tenant-owned homes. And some markets and parks really don't lend themselves to home ownership. Some of you may be familiar with the Memphis market, which has always been a great cash flowing market for single family homes, and the price range is quite low. And I've talked to many investors or kind of people early in the process have said, well, if homes are so cheap, why do people rent? Why don't they buy? And some markets are just that way. There's really no explaining it. There's more of a renter mentality in certain markets. And the same thing happens in mobile home parks, where some residents aren't, aren't thinking in terms of they want to own a home, they want to stay in it, they want to take on the responsibility of dealing with maintenance. They would just rather be a renter, have the flexibility to move if they want to, and have the ability just to call the landlord if there's any issues with their home. The other thing about park-owned homes, and this is from an investment standpoint that I love about it, is the rent ratio is really high. I mean, it's some of you probably kind of know about the 1% ratio, where if you're buying a single family home for $100,000, you would hope that you'd be able to get rent of $1,000 a month, or 1%, to have the property cash flow. A lot of markets are a little bit less than that. Strong market might be below that. I know they often talk on bigger pockets about trying to find a 2% rent ratio house. Sometimes you can find a house that you've maybe invested $50,000 in, that you can get $1,000 rent. That would just be a home run to be able to get to that 2% rent ratio. But in the mobile home park world, just recently for a park that I have in Georgia, we bought a refurbished 1997 home from a mobile home park flipper who buys homes at a discount, refurbishes them inside, and delivers them to park owners like myself. And we purchased that for $20,000 installed, and we'll be able to rent that out for about $550 a month. So that's a 2.75 rent ratio. So that just blows away what you see in other real estate assets. On the tenant-owned home side, you've got the benefits of the tenant's responsible for all their home maintenance. They just rent the space. So if you have a model, a park that's all tenant-owned homes, basically it's almost like you're renting renting a parking lot, and you're just renting out the individual spaces. Tenants own their home, deal with all the maintenance. So there's lower park maintenance costs. The park just needs to take care of the roads, landscaping, and any other infrastructure issues on the park. Could be the sewer system, lighting, things like that. Residents tend to stay there longer. If they own their home, it's less likely that they're going to move, because they would have to spend that $4,000 to $8,000 to move to another park locally, and it's really they're probably one of their biggest assets to own that home. So they are stickier. From a financing standpoint, to acquire a home, banks currently prefer to lend more on the value of the lot rent, and how that contributes to the net operating income versus the income that comes in from the portion of the rent that's related to the park owned home. So there's kind of pros and cons to both sides. It really depends on kind of your comfort level, what kind of returns you're looking for, and what kind of park you'd like to manage. Okay. This is what I like to say: if Warren Buffett likes it, maybe we should too. So there's kind of this Warren Buffett effect on the mobile home park industry, and he's got kind of hands in two pies in the business. One is his company Berkshire Hathaway purchased Clayton Homes, which is the largest builder of manufactured homes. And then later that year, he bought a lender in that space, 21st Mortgage. It's typically been hard to finance mobile homes for a couple of reasons. One, the values are low. Even currently you can get a new mobile home for, on the low end, say the high 20s, low 30s, up to over $100,000. And banks just weren't really interested in lending on an asset that small, in the same way they might not be interested in lending on a single family home, where the loan might only be $30,000 or $40,000 for a lower price single family home. And they tend to decrease in value over time. So banks really didn't want to have anything to do with that. So he acquired 21st Mortgage that allows financing for mobile homes, and then allows him to generate more revenue on the Clayton Homes side of the business. And it's been really great kind of having his stamp of approval on this business, just to kind of add credibility that a big name like this is finding value in it, and realize that it is solving a big need for affordable housing. Okay, moving on to about mobile home parks as an investment. So what makes these compelling? And there are a few things that I like about this space that makes it really different than a lot of other asset classes. The U.S. is suffering from a huge need of affordable housing, and very little is being built. If you look across the country at the kinds of apartments that are often being built, typically it's at the higher level Class A apartments. Not much is being built in kind of middle to even lower class neighborhoods in the same way they were in the 60s and 70s and 80s. And a lot of that has to do with the cost of labor and the cost of construction. So the numbers just don't pencil for a lot of those builders to build a B or C class property, or build properties in kind of maybe less B or C class neighborhoods. So there's a huge need for affordable housing, but not much is being built. And similarly on the single family home side, a lot of parts of the country, there isn't a lot of entry level homes being built. And unfortunately, the middle class is shrinking. That's just kind of a fact of where we are in our economy right now. And it's been decreasing steadily since the 70s, as you can see here on the slide, from around 61% being considered middle class down to around 50%. And when you look at a lot of the projections for growth in the employment sector, a lot of it's in the service sector. Yeah, that could be retail, could be the food service industry, could be like home healthcare, things like that. So a lot of that growth in the economy is in lower wage jobs. And when people in that kind of at that financial level can't afford brand new A-class apartments. In the mobile home park space, if somebody's making, if you have a dual family income, even making minimum wage, they can often afford to rent a 3-bedroom mobile home. Often they'll talk about how much somebody should allocate, the maximum somebody should allocate to housing as maybe being 1/3 of their income. So even in the mobile home park space, if you assume maybe 25% of their income, if somebody could rent a home for $500, or let's see, I say $500, that would be the equivalent of $2,000 a month that they would need, or income that they would need to have 25% of their income going towards, going towards their housing allowance. And $2,000 a month, that's $24,000 a year. That equates to 10 to maybe $11 or $12 per hour. So if somebody's making minimum wage, or even if they have a decent job making 15, 20 bucks an hour, or if you have dual household income both making minimum wage, they can easily afford a nice, clean 3-bedroom mobile home for themselves and their family. And as I mentioned earlier, there's just a huge need for affordable housing, and there's typically because of the way that mom and pops have run operations not professionally, and have let a lot of them deteriorate over time. There's literally tens of thousands, could be hundreds of thousands of vacant lots with infrastructure that could have homes placed on them that could really serve a huge need to add to the affordable housing stock in a really easy way. And that's one of the goals of my company, is to find a way to add as many of those as we can to the housing stock. From an investment return standpoint, some of the things that make them attractive is they're recession resistant. I would say, don't want to say recession proof, because if there's a big hit to the economy, people will often have to find different living arrangements. But from a recession resistancy standpoint, if the economy is doing well, there's still always going to be a need for lower wage earners to have a place to live. If the economy is not doing well, then the people that were living in nicer apartments typically step down a little bit to be able to find something they can afford a little bit more. And that will often have them looking at mobile homes in a mobile home park as a place to live that's more affordable for them. The market is highly fragmented with many mom and pop run parks, and this is just because it's happened more in the last 5 or 10 years, where you have bigger players, the public companies, some other bigger operators, hedge funds coming in and acquiring parks. But many of them are still run by small family operations. Maybe it's the only park they own, maybe they own 1 or 2, maybe they live on the park, and they're often not run well. And it could be a combination of inefficient operations. The payroll might be too high. They might not be charging back for water. They may have let spaces go vacant. And I know when I've talked to people about the parks that I've purchased or looked at, they would say, like, why wouldn't an investor want to, or a park owner want to fill in those spaces and earn the income? And some of it's just a matter of, time, effort, and money. A lot of these parks, if they're owned by an older couple that have owned the park for a long time, they might not have any debt on the property. They're making plenty of income from it. So for them to think, do I want to go out and buy multiple houses for $20,000 and rent them out, or find some way to finance them, or do a bunch of advertising to bring in new homes on vacant lots? Sometimes it's just not worth their time and effort, and that just over time causes parks to become less and less occupied, which is really a great opportunity for operators like myself to come in and make that investment to increase the occupancy in the park and to streamline operations. Another thing about working with mom and pop sellers is the ability for seller financing. Sometimes the parks can be hard to finance. Some larger banks do it for bigger parks. There are some regional banks that do have a little bit of a focus on mobile home park lending, but for the most part, it's if a park is underutilized or has low occupancy, financing can be challenging through a bank. So oftentimes it's possible to get financing through the seller themselves. And for them, it can really be a win-win. Maybe they're older, they don't want to deal with managing the park anymore. If they sold the park outright, they might have to pay a large capital gain tax on the park. If they carry a note on the park, then they're only going to have to take capital gains on the cash they received, and they get income from the park. So for them to be able to get potentially a little bit of cash out of the park, and then to be able to have an income stream after that, can be really ideal for them. And at worst case, if the loan was defaulted on for whatever reason, they just end up taking back a park that they know how to run and they're very familiar with. So the ability to get seller financing is one of the great things about that you find in the mobile home park space, which is much different than you'd find in the apartment world. And kind of talking a little bit about the inefficient operations from a cost standpoint, whether it's payroll or other kind of higher operating expenses, mom and pops have typically left rents under market. And again, that's just because they're not sophisticated professional investors really looking at all the different comps in the market to see where they're at. A lot of times, again, they're making enough money to keep them happy. They may live on the park, they may have relationships with the tenants. So oftentimes you'll find rents that are below market. Lastly, the depreciation can be a little bit more aggressive and a shortened time frame compared to homes or apartments that are on a 27.5-year amortization schedule. When you do a cost segregation study on a park to be able to carve out things like the fences, the lights, the sewer, and other components of the infrastructure, you can have a faster depreciation schedule than you can for other single family assets or multifamily. Okay, why isn't everybody doing it, right? This is like such a great asset class. What are some of the challenges of buying, running, and then eventually selling a park? So it's not all the that's not all great things about running a park. There are challenges. There's typically a higher level of maintenance and attention that needs to happen on the park. So one of the first things is that there's a higher level of due diligence required. It's not like in this space that you can, call a home inspector in the same way you could for a single family home. And home inspectors done thousands of homes. They have a checklist, they know what to look for, and they can tell you kind of like, here's the things I found. Then you can go to the seller and negotiate what needs to get fixed. In the mobile home park space, there's just a lot more moving pieces. Sometimes even if the park has city, sewer, and water connections, there's still the infrastructure in the park that the park owns that needs to be looked at. Sometimes parks will have their own sewer treatment plant or septic systems. Sometimes one or two big systems for the park, sometimes individual septic tanks for each home, and that needs to be looked at. So there's just kind of more like moving pieces. It takes a different expertise to look at a park to do that kind of due diligence than it would for an apartment. It's also can sometimes be more challenging even to find rent comparables. Because you often find in some markets that the rents that you could charge aren't even out there in the market, because there's other parks that are being run by mom and pops that are also below market. So you try to look what other parks are renting for. You try to look for what other apartments are renting for. So it's probably not as simple as looking on Zillow or Craigslist an apartment or a single family home to kind of get a sense of what rents should be. So for somebody acquiring a park, to get a sense of what the rents could be to generate future income can be a little bit more work. When you're in the affordable housing space like I am, they're more management intensive. I think if you've got kind of higher end parks on the West Coast or East Coast where it might be 100% tenant owned properties, those would definitely be lower maintenance. But in the affordable housing space, you deal with some of the same tenant turnover issues and maintenance issues and tenant screening issues that you would deal with in a Class C apartment. I mentioned before about bank financing not being as prevalent. So sometimes you've got to do a little bit more work to potentially get seller financing. You might have to put a higher down payment to be able to make a bank happy. So bank financing can be challenging. Many parks you'll find aren't in major metros. One of the guidelines a lot of mobile home park owners try to look for is an MSA, metropolitan statistical area, that's at least 100,000 people and has a Walmart close to it. So with this idea that if there's 100,000 people, there's probably a wide variety of employers that are going to allow you to continue to have a stream of tenants. And if there's a Walmart close, then you kind of have this thought that if Walmart has done all this market research and demographic research to know that this city itself has enough to fund a business like that there's also could be a demand for affordable housing in those markets. I've looked at some parks that look like they're running great and doing well, and they're in a small town, probably 100 miles from the closest Walmart. And those I would tend to shy away from. But there are parks in markets that are below 100,000 people that should still be looked at, and I do look at those closely as well. And when you get down to what would be considered a little bit smaller town, then you really have to look at what the competition is. Are there any economic drivers what would kind of bring people to this town? Because you want to make sure that you just don't buy a park that's either occupied, kind of highly occupied now and can assume it's going to be going forward, that you'll have a stream of new tenants. But also if you're buying a park that's 50% occupied, for example, you really want to be able to do the research to feel comfortable that as you go in and add new homes to the park and start advertising, that there's going to be enough demand to fill the park. And then lastly, the market for resale isn't as liquid as other multifamily assets. Homes definitely are easier because you can sell them to another investor or an owner occupant. The market for apartment investing is a lot it's a lot hotter and people kind of understand and can get their head around investing in apartments. Mobile home parks, people still, again, don't quite understand, not quite sure how they'll manage them, because there's no nationwide property managers, or one nationwide property manager, but it's not as common as it would be to find somebody to manage the park. So that does make it harder to resell. Typically the cap rates are higher in this space. So from an acquisition standpoint, again, the prices can be a little bit lower, and they're starting to trend down. Cap rates were a lot higher from a purchase standpoint, probably 4 or 5 years ago, but they are starting to come down as people are starting to understand a little bit more about this business and what the NOI drivers are. But that being said, the market for resale would be a little bit less than in the multifamily space. Excuse me. Okay, so everybody's excited now, right? They know all the benefits, kind of understand some of the challenges. So you might think, how do I get started? I want to go out and become a mobile home park owner. So how do you do that? There's a few ways. Some people get started in this business by just finding something local to near where they live and start small just to get their feet wet. I would highly recommend going to the Mobile Home University Boot Camp put on by Frank Roll. Frank and his company are the 5th largest mobile home park operators in the country. And he puts on 3-day seminars, probably 5 or 6 times a year, kind of 2 full days, with him on stage, kind of going through a soup to nuts of everything that's involved in owning mobile home parks. And you also get to tour some parks, just kind of get a sense of what's out there. So that is probably I think one of the primary places where you'll be able to get some great education. And then if you were going to buy something small, again, I would highly recommend having it be someplace near where you live, so that you can physically be on site. Depending on the size of the park, if it was large enough to be able to possibly give free rent to an on-site manager, and that could work. But if you're going to manage it yourself, definitely having something in close proximity is important. And then again, make sure that you have the reserves to improve the property. If there's kind of one big thing that first-time mobile home park owners have their business fail, is just not having those reserves or the money to invest in the business. Oftentimes when you go into a park that's has an occupancy issue, the biggest way to really stabilize that property and increase the NOI is to fill the homes. And that's whether you want to make it a tenant-owned home park where you're bringing in new homes to try to sell them, or advertising to bring in tenants who own their own home, or if you're going to buy homes to rent them out, you need to make sure you have those funds available to improve the property. Another way, if you wanted to buy your own park, but kind of have more of a hands-off approach to it, I work with my mobile home park consultants and property managers, a company called CCI Investments. Some of their clients acquire parks outside the state where they live, and they just let them handle all the operations, deal with the stabilization, go out and kind of deal with finding new homes to fill in the park, and are really completely hands-off and have never looked at the park. It's not a huge majority of their business, but it is part of it. In that situation, you'd probably need at least $300,000 to $500,000 to, assuming you're going to get some financing on the property, to buy a little bit bigger park, to make the down payment, and then to have money to invest in it to improve it. And then there's a couple ways to kind of go the passive investing route. Blue Elm Investments, my company, has direct park ownership through an LLC. So my investors, if they care to, and some do and some don't, but I'm kind of more than happy to educate them about all the ins and outs of the mobile home park operations and ownership. If they've got any questions about kind of what's going on, and they want to take a little bit more active part in their knowledge and understanding the business, then they can do that as well. So that's another good way if somebody wanted to get their feet wet in the mobile home park business without doing direct ownership, to do it passively through a syndication. Similarly, on the passive income side, passive investing side, there's quite a few mobile home park funds. I know a few operators that what they do is instead of buying a single park or a couple parks and putting it into an LLC and raising money for it, they'll raise money ahead of time for a fund, and then they'll go out and acquire multiple parks across the country. So in that model, it's the benefits are that it's your risk is spread over multiple parks in potentially multiple different parts of the country. Returns might typically be a little bit less than a direct investment, but again, it's another way to approach investing. Another way that's just very, even more passive would be to purchase shares in a publicly traded company. When I first got started, I bought shares in the three public companies, publicly traded companies that are operators and one builder. And for me, I've always kind of found that if I've researched stock on the side or just kind of kept it on a watch list and looked at it, I didn't quite have as much skin in the game as to when I actually, put some money in the stock. That kind of caused me to know, okay, how much money have I made so far? I'm getting annual reports. I'm getting news alerts about kind of what's going on with the company and the industry. So if you just wanted to, again, find a way to get a little bit involvement in the industry, one way would be to invest in a publicly traded company. Okay, great. Questions and next steps. Are there any questions that anybody has? Okay, let me see. Okay, the first question says, since most cities, neighborhoods, and lenders don't favor mobile home parks, they tend to frequently require seller financing and higher cap rates. So all your refurb work to increase NOI or resell will be a lower bang for your buck and require you to carry finance back as well. So I think the response to that, I would say, one of the reasons why banks typically don't like to finance on them is in relation to a low occupancy. They might say, hey, unless it's at least 80% occupied, we don't want to lend on it. So if we can come in and bring the occupancy up to 90+%, then it's made more attractive it's made more attractive for a future buyer to get bank financing for it. Another question, how do you underwrite mobile home parks? Is there software available? I have a couple tools, again, because of my background's in finance and I've got a ton of financial modeling experience. I have a few simple models where if I see a park that looks a little interesting, I can plug some general information in just to give me a sense of whether it's worth approaching or worth kind of taking the next step on. And then following that, if I think, hey, this park looks really good, then I'll kind of take the next level down and I have a more complicated model that has 5 years of rental projections and a lot of operating expense projections, as well as a lot of projections on investor splits to kind of see if I can put a deal together that's going to be attractive to my investors. So that's how I do it. So no, there's no software available. It's just models that I built myself. The other question, is it hard to find third property management? Yes, it's pretty hard. I mentioned there's one nationwide property manager called M. Shapiro. That's the only kind of nationwide one where you can just call them and say, hey, I've got a park here. Can you manage it for me? And so it's kind of unusual. I don't know why some other property managers haven't gotten more into the space, but yeah, apartment property managers and single family home property managers, they're just not interested in the space. They don't understand it. It's just kind of foreign to them. And nobody's really dove into that space. I use my consultant / property managers that I use, CCI Investments. They manage about, I think it's about 85 parks across the country now. And once I aligned myself to work with them and have them kind of, help me run the business, I was looking for parks near where they already had a presence. So that's, my first parks were in Georgia. They managed 4 or 5 other parks in that area. And and so I wanted to have some place that was close to them. I found some other parks that I thought were really attractive in the Colorado area, or sorry, Denver area. They don't have any presence there, and they don't have teams of crews to go out and do work to work on homes. So I stayed away from those. So it's so that being said, yeah, it is hard to find third property management. I've got some great guys that if somebody was going to buy a park near where they had a presence, you could absolutely use them. But if not, again, there's only one other national carrier. The question, is there a minimum size lot of land that is suggested for a MHP? Not necessarily. There are some kind of guidelines in terms of how much space there is, like per home in terms of a park that might feel too cramped or too dense. Some of it's just related to size, like the number of pads that you might have in the park itself. And that's really going to depend on whether you want to be able to manage it yourself, if it's someplace close to you. If a park is too small, I would say, maybe even less than 50 spaces, it might not make economic sense to be able to have a maintenance person on site, or maybe an office manager who you might give free rent to or pay a certain amount of money each month per pad. Let me see. Okay, another question. In my area, I see MHP owners collecting rents on a weekly basis. Is this common? It does depend. In the park, the first park that I bought, the owner was only accepting cash. So we changed that as soon as we bought it, because we didn't want to accept cash. So he was going out to the park 2 or 3 times a week to collect cash. So those people were on a monthly monthly rental agreement, but he would still be going to the park throughout the month collecting cash. I'm looking at a park right now in Mississippi, and that's actually a mix. It's a mix of tenants that are on monthly, that pay rent monthly, and some that pay weekly. And that's just kind of a function of the market. Some people just like to have their cash flow coming in. They get paid every week. They can pay rent every week. So so it really does depend on the market. What does a typical passive MHP syndication look like? 5 to 7 year old refi, sell, exit. The ones that I put together, I like to put a 5-year band on the property to either sell after 5 years or potentially refinance after 3 years or so. It's funny, I find investors on both sides. Some people that I've talked to have said, gosh, if you've got this park stabilized and it's throwing off 12, 13, 14, 15% cash on cash returns every year, like, why would you want to sell it? And then there's other people that have come at it more from, okay, I've been in the investment for whatever 4 or 5 years. I'd just rather get my money back, cash out it, and move on to the next investment. So it does kind of depend on what the syndicator and the investor kind of looking for their strategy to make it work for them. But when I build my financial models, I assume that there will be probably some exit after 5 years. It has to be, I think, at least that long. If it was shorter than that, it's usually not enough time to stabilize the property, and not enough time to have some good operating history that a new buyer would come in and be able to see, okay, I can kind of see a couple years of strong, consistent net operating income to make them comfortable as they buy. Let me see a question. How does underwriting differ between MHP and apartments? Yeah, in many ways, very similar. I guess the only difference between mobile home parks and apartments is that mix between tenant-owned homes and park-owned homes. So in an apartment, you may have a combination of studio, 1 bedroom, 2 bedroom, 3 bedrooms. So you're modeling out those. But when you go into that, you kind of know what that mix is. When you're going into a mobile home park, as an operator, you're deciding, okay, going forward, or like currently the mix is X% park owned, X% tenant owned. What do I want that profile to be going forward? And you can continue to kind of keep that same ratio or change it over time. So that's probably the one big difference. But other than that, kind of modeling out rent growth, expense growth, all those things like that, understanding ahead of time if there's any capital improvements that need to happen. Those are all very similar between mobile home parks and apartments. Okay, next question. This is Anita is looking at a 160 unit park that is part RV and mobile homes, but it's currently 55 and older. Two questions. Is it easy to convert RV into a slot compatible for a mobile home? And what do you think about 55 plus designations, converting it or keeping it? It does depend on the size. Typically an RV, a site that was built for RVs, aren't big enough to handle mobile homes. So, so again, depending on the size, sometimes they're convertible, sometimes they're not. And that is one question I do get from people is, do you allow RVs on your park? And one thing that's, it can be a good business. Sometimes if people are renting daily or weekly, the rents can be higher. The downside to it is there's more management to it, because if there is that case, then you have to have somebody on site kind of checking people in, checking people out, versus in a mobile home park, if you do have an on-site manager who's just dealing potentially with maintenance requests and collecting rent every month, they don't have to be there necessarily every day, all the time, kind of on call, managing an RV park. The 55 and older, I would say that they're hard to convert. Once they have that designation, obviously you're going to have people that moved into that park because they were 55 and older and didn't want to have kids and families, running around. So to make that conversion is really a difficult thing. So if I were you, I would either just kind of accept it as the way it is, and kind of know that the plus side to it is that maybe it's going to be lower maintenance because there's going to be less people living in the park. It's just a single person or a couple who's 55 and older. The downside being it does limit the amount of your tenant base that you can attract. But again, depending on the market, if there's a huge demand for the 55 and over market, then you might not have any problem at all keeping that park occupied. Great questions, everybody. Thanks so much. This is awesome. Do you work with non-accredited investors in your projects? Yes, so far the deals I put together, I've accepted both accredited and non-accredited investors. Okay, let me see. So Amber wants to know, how much in upfront reserves do you typically recommend having before you close on your deal? Do you recommend a certain percent? It really does. It does depend on the project. So I guess there's a couple kind of buckets that when I put the deal together, I want to make sure I have the funds to be able to do. One would be to have the money to repair any vacant homes that are on the park. Secondly would be the funds to be able to buy used homes to fill in the empty spots. And then next to that is kind of through the due diligence process, I'll be looking for, like what needs to be done right away. Like the first park I bought, it was things like we needed to paint some of the homes, we needed to fix the roads, we needed to fix this one issue with some mailboxes, there was some fencing, some new signage. So I have to have money to repair the homes, buy new homes to fill the park, and then deal kind of immediately with any of the capital expenditures that need to happen. Separate from that, again, I don't have a percentage, but depending on the size of the park, again, you might want to have, and also depending on the current cash flow from the park, if it's making a little bit of money, then your reserves would have to be lower. If it's losing money when you buy it, then you have to have make sure you have reserves to be able to fund that. But I would say, if you bought a park that was $1 million and had those other reserves set aside, I would say having another bucket of $40,000 to $50,000 set aside for anything else unexpected would be safe. Okay, Bethany. All right, let me just double check how we're doing on time. Okay, good. Bethany, how do you find lenders who lend on mobile home parks? What is a typical LTV? Is it based only on land? What about all the homes being older than 78? Yeah, so from a lender standpoint, sometimes it is kind of based on the size, or it is based on the size of the loan. I talked to Wells Fargo and B of A, and they don't want to deal with lend on anything if the loan value is, the loan amount is less than $1 million. So if you're buying a park where the park is $1 million, then obviously your loan would be less than that. So they're not open to lending on those. There's a couple banks out there. One that I had some good conversations with about a park that I bought in Georgia that I eventually got seller financing for, called American Commerce Bank. They now have about 15 to 20% of their loan portfolio in the mobile home park space. And they will lend on between a 65 to 70% LTV. And they're not concerned about the age of the homes. At least through my conversations, that never came up. They will lend on all of the income from the lot rent and a percentage of the income from the park-owned home rent as they're doing their calculations. So I just want to make sure I just did cover that completely. So it's not, is the LTV, she asked, is based only on the land. So not necessarily the land, but the income from the lot is the primary thing they'll base the value of the park on, and a percentage of the park-owned home. Okay, Stacy, thanks for joining, Stacy. Hi, Todd. Are there licensing laws for mobile home parks? Every city and county has their own rules for mobile home park operations. Some cities, I mentioned, we just bought this home for this park in Georgia. So there were certain permits that we had to get to be able to put that park on the property. Once it's installed, then we have to bring a certified electrician and plumber out, and then the city comes out and says, okay, kind of gives us our certificate of occupancy, and then we're good to go. The other ones just kind of make you get a business license and an operator's license to run a business in that town. So no specific, I guess, quote, licensing laws that I've seen for mobile home parks. Okay, Ben wants to know, I've heard that one should avoid parks that are on well, septic, and only consider parks that are on city, water, and sewer. What are your thoughts about it? This one, I would say it depends. The parks that I have are on city, water, and sewer. It really depends on what the well and septic system is like. I know a lot of operators, and a lot of the parks that my property managers run are on well and septic. And if the septic systems are in good shape and have been tested and seem like they're solid, and you could have people that can inspect those, and you've got a well that is regularly maintained and tested, they can be great. The plus side to having those is you have control over those, and you're not paying any of the city fees or any of the city connection fees related to the water. And you can potentially, include those in the rent in the same way, or charge those back to the customer, your tenants, in the same way that the city might. So I don't have any of those that are on well and septic, but I know many people that if they've purchased those parks and get comfortable with the kind of the quality and condition of those, they're absolutely happy with them. The one thing that I would say people tend to stay away more from is one where they have their own sewage treatment plants. So that would be one thing. So well and septic is not too bad, but if you have a water treatment system and a large leach field behind the property, that would be something I would tend to stay away from. Okay, Kelly says, apologies if I missed this. What is your hold time on mobile home investments? Do you plan to hold these for a long haul versus 5 to 10 sell and syndication? Yeah, so I just mentioned that earlier, so I'll just reiterate real quick. So I typically build my models where I have a 5-year exit. And then through that time period, I'll kind of see how things are going. If the market's great at year 4, the market's hot, somebody makes a great offer on the property, we might sell it sooner. If it looks like refinancing might look better during that time frame, that's a possibility. But I build my models to assume that we'll sell the park after 5 years and return the capital to my investors. How do you evict tenants? It's really similar to single family homes or apartments based on where your market is. So I try to buy, or I would only buy parks in states that are landlord friendly, which means I stay away from the coast and stay away from New York. So it's a similar process, serve them if they miss their rent, serve them a 3-day notice, and then go through the eviction process, in each town. And it would be similar to the way you'd evict somebody from an apartment or single family home. Question from Mark, success rate of requiring MHP tenants to pay rent using online payment methods. I would say it depends on the market. You know, again, I'm in an affordable housing play where people don't have a lot of savings, kind of living from paycheck to paycheck. So, you know, may or may not have kind of traditional access to traditional banking. So that would be great to be able to have people who paid online, but for the most part, you know, we allow payment by check or money order, and we haven't tried to implement the online payment system for our tenants. But if the market was a little bit nicer, where people again might have access to a bank account, felt comfortable, you know, having money pulled from their account every month, which a lot of people again that are maybe working more paycheck to paycheck wouldn't have access to. But if I was in a market that lent itself towards that, I would definitely try to do that. Another question from Mark. Any difficulty finding repair contractors, materials for repairing mobiles? Yes, I would say so. I mean, you know, it's in any market, any world, it's kind of always hard to find good contractors, but you know, there's not everybody knows how to work on mobile homes. That's one of the great things also about this, my property managers I work with, and why I was looking for parks that were in close proximity to where they already had a presence, is that they have crews that they're not employed by them, but they work for them often. So I've got, you know, some of their crews, again, they've worked with many times in the past, that can go out to my park for, you know, a week, 2 weeks, 3 weeks, whatever it takes to go in and fix those homes up. So that's kind of, that's the way I do it, and why I was looking for parks near where they already had a presence, where they are always kind of, you know, multiple parks that are under their management or having work done. You know, separately from that, I have hired local contractors. It's kind of just, you know, gone out and received bids. But yeah, it is always a challenge to find good contractors. Okay, question from Joseph. How often do you see no money down seller financing in this space? You know, not too often. I guess I would, you know, say sometimes if there's zero down financing, there might be a reason for it that you know, might not be a good reason, I should say. If a seller is saying, hey, you know, I don't want any money down, just give me zero down, or you can take this thing over, then, you know, there might be some other reason why they would feel forced to do that versus selling a park where they could at least get some down payment. You know, that being said, I am looking at one park closely now that is a zero down situation, and the person's willing to carry back a note. And it's you know, it's a little bit of a long story, but it's, you know, relationship through the property managers that I have who know this seller. He owns 7 or 8 other parks. This one he's just tired of, wants to get out, wants to get, you know, a little bit of money out of it eventually, and is willing to do seller financing. But that's kind of more on a relationship basis that those opportunities come up. So if you find a situation where you get where somebody's offering zero down, you know, just make sure that you're taking a really good look at, like, why is that the case, and why would the person be willing to do that versus selling it where they would want at least a little bit of money out of the deal to begin with. Okay, let me see. I don't see any other questions. So it looks like, yeah, we're at the 12 o'clock mark. So does anybody else have any other questions? If not, I just wanted to encourage you to go ahead and join my Blue Elm Investor Club by going to the blueelminvestments.com Investor Club button and clicking on that and signing up. We've got some, it seems like just in the last month or so, some strong deal flow coming in. So we're actively looking for partners and investors. And I'd like to offer everyone a free gift. So if you'd send me your email, I'd love to send you one of these quote books from either Jim Rohn, Zig Ziglar, or Brian Tracy. These are great little quote books that my good friend Kyle Wilson, who was Jim's 18-year business partner, put together. So if you'd like one of those, please feel free to reach out. And yeah, I don't see, let me see, sorry, do I have time for one more question, Melissa?
Yeah, you have time. You have about 15 minutes left. We've got you
bucked
off.
Right?
Yep.
Okay,
so,
great.
If anyone wants to ask more questions, go right ahead.
Alrighty. Question from Richard. Hold on one sec. Hold on here. I lost that. Okay, let me bring back that. Oh, come on. Sorry, I'm trying to bring back that slide. And okay. So anyway, sorry, a question from Richard. In terms of upside, have you been able to add pad spaces or add storage units, carports, or even resell property for development? I haven't in my parks. So kind of going through those one by one. If there's additional spaces that are that could fit a mobile homes and the city allows it, then yeah, definitely it would be possible. It would all depend kind of in that market, the cost of putting in that infrastructure, whether it be sewers and all the electrical related to that. Yeah, that's definitely one possibility. Storage spaces, carports. I have seen parks that I've looked at to potentially purchase do have storage units on the property. So I think that's a great way if there is extra land on a parcel that could accommodate that. That would be really an excellent way to use that space. And I've seen probably a dozen parks that it's like mobile home park and self-storage unit kind of all packaged together. So that's very common. Reselling a property for development, absolutely. One of the parks I'm looking at comes with 2 parks and then a parcel of land that can be redeveloped because it's individually subdivided. So that would be possible to kind of keep the parks and then develop the other property later for redevelopment. So that again, it's definitely possible. It really again depends on the cost to do it and what the market dynamics look like. Question from Sam. Any books or websites for mobile home parks? Yeah, let me see. A lot of my education, I mentioned that Mobile Home University Boot Camp is great. There's a couple great podcasts. Kevin Bupp, who's a big operator, he's got a great podcast. A guy named Jefferson Lilly, who runs Park Street Partners, has a great podcast. There's not too many books on the space. There's one of the kind of original famous books about it is Deals on Wheels. And it was about a guy who made his money flipping mobile homes himself. So he would go into parks, find, go to a mobile home park manager and say, hey, you've got this park that's abandoned or, somebody died and the heirs don't want to pay the monthly rent anymore. Can I buy it from you and sell it to someone else? And they would be able to buy parks for, $500 to a couple $1,000s, and then turn around and sell them to, potentially somebody like me after they've refurbished them for $15,000 or $20,000. So there's a good book called Deals on Wheels that relates to that. And then kind of on the website standpoint, a couple of people that I mentioned have their own websites. My website, I'll periodically, write newsletters and blogs just to keep people people that are on my list apprised of what's going on in my business, but also what's going on in the industry, just from an economic standpoint, as well as what's happening in the mobile home park industry. Question from Anita. Can you speak about investing with you, minimums, expected returns? What are you raising for now? Yeah, so when I put my syndications together, I'll typically have a $50,000 minimum in my project. I really can't talk about expected returns and anything I'm raising for now, just due to the SEC rules and whether my next deal actually is a 506B or 506C. So Anita, be happy to reach out. We can have a separate phone call about that. Thank you. Let me see a question from Nick. What do you think about the future of mobile park or RV park? What do you think the younger generation will still need this after 15 to 20 years? Well, I think, my thought is there's always going to be a need for affordable housing. The population is going to continue to grow in the U.S. over time. I mean, that's just, a fact of life. We're going to continue to grow as a country. And if there's not more affordable housing being built in the single family home or apartment space, they're going to need a place to live. So, I think sometimes when people think about like the younger generation or millennials that want to live in, hip downtowns, there's going to be a market for those people as well. But there's always going to be people who now are in their 20s, 30s, getting into their 40s, who, are going to be in blue collar or closer to minimum wage jobs that are going to need a place to live. So I feel I'm, absolutely confident that, over time, there's going to be a continued demand for affordable housing. And I think mobile home parks are going to address this. My assumption is that over time, the stigma around mobile home parks will start to decrease. And some of it's going to happen because of the publicly traded players in the company, and operators like me are going to put the investments into them to make them nicer, to keep the landscaping up, to take the homes that are not looking good over time, paint them, kind of add signage, add fencing, just to make them look nicer. So I think over time, as more professional operators get in the space, the stigma is going to go away because they're going to be more attractive than they have been historically. But thank you for that.
Great. Does anybody have anything else for Todd? Any other questions? We have a couple more minutes.
And one question that people, I was going to, let me see another question.
Ahead,
I was going to say one question that I often get from people is in terms of how else to use the property would be related to tiny homes. People say, oh, there's this big trend in tiny homes. Would somebody want to consider, putting homes on there? And typically, the numbers just don't make sense. These are tiny homes are between, 400 and 450 square feet or something. And while they're, really cool and nice, if it's a family who wants a 1,000 square foot, 2 or 3 bedroom home for their family, a tiny home really wouldn't make sense. So, again, for the market I'm in, having the ability to, kind of put in lower cost manufactured homes is going to be more cost efficient than a tiny home. Okay, Michael Fisher, have you ever heard of Jimmy Napier from the Florida Panhandle, a mobile home park owner for 40 years? If yes, tell us what you know. If not, thank you anyway. No, I'm not familiar with Jimmy. Sorry about that, Michael. Okay, good. Thanks for putting that link for the Deals on Wheels book, Melissa. That's great. That's the one. Yep.
Okay, great. Well, this has been great. Thank you so much, Todd. If no one else has any other questions, you can wrap things up.
Okay, great. Thanks again for joining, everyone. And, feel free to reach out via my website. And again, appreciate your time and all your questions. This was fantastic. And thanks for coordinating all of this, Melissa.